Mr. Alok Gupta, the MD, as well as Ramakrishnan Ramaswamy, the CFO, joining us in the studio right now. Hi, gentlemen. Thank you so much for coming down.
Thank you so much for inviting us.
Well, starting your new journey with the listing at the public bourses as well. Talk to us about what's the utilization of these funds, because I understand large part of it is going towards debt reduction. How will it augment the profitability going forward?
Well, the objective of the issue is to pay our current debt, and that significantly reduces the interest cost and therefore turns into a better free cash into the company. The balance portion is as growth capital. I think for the last few quarters we've been focused in terms of re-looking at our product portfolio. We now have market leadership in the mass premium segment, have consolidated our position in the P&A segment. Iconic White, which is one of our recent launches, has gone on to do the million cases in the first 13 months, and then last year did about 2.2 million cases, and running at an excellent ARR, so to speak. And the lot of work that is now being done is in the premium and luxury segment, where our presence was virtually nil. But January this year we launched Zoya, which is our first entry into the premium segment. It's a small batch gin and doing exceedingly well. So
Alok, your company has been the masses and slightly on the higher side as far as whiskey is concerned, which is predominantly the drink of choice for India.
That's true.
The luxury segment itself has been small so far, and of course now it's bursting. That's why you'll also have to be there. What is the kind of mix you would like to see in future? The kind of current portfolio which you have, you wouldn't want to leave that, but also have a meaningful presence in the that luxury, the expensive bottle segment.
No, absolutely. I think we've had our strength is in terms of what we call as offline, off-premise retail. We have pan-India presence, 93% width of distribution. We pretty much cover every outlet with Officer's Choice, Iconic and Sterling Reserve. We've also built another vertical called Prem Brand, which is focused on the premium and luxury part of the world, because sort of the skills required to sell premium and luxury brands are very different than they are required for the more sort of daily consumption product. So it is not just about building the product portfolio; it's also about building the organization that can meet the need of the need of the distribution and the trade.
You have the distribution network. You need to work on your product offering and the pipeline, and the same distribution network will be utilized, or does it require more efforts and resources?
So by and large, the same network is utilized, which is very, very off-premise focused. But on-premise, key account play a very, very important role for the premium and luxury product. So we have built that capability over the last few quarters. So I would say we are now ready to participate meaningfully in the premium and luxury segment.
Sure. Mr. Ramaswamy, let me get you into a conversation as well. Could you talk to us about what's the current market share that you garner right now? What's the target? And overall, your margins were in high single digits. Given that entire premiumization wave, should we expect the margins to head towards a double-digit mark soon?
Yeah, currently we have around an 8% market share in the product segment where we are. And on a future date, we would be at par with the peers wherever. We are currently at around 7% on the EBITDA margins. We would be at par with the peers in the next couple of years.
And what is that? What's the industry average?
It's mid-teens.
And when do you see that happening? Over the next 3 years, 5 years? Or is this something which could be a bit of a more immediate thing, because the entire premiumization thing that Alok also talked about?
The early teens would be immediate, and the mid-teens would be maybe 2 to 3 years down the line.
Alok, what is the kind of levers which exist in the company which you can press to improve your volume growth, or what is the aspirational volume growth number with these efforts which you're talking about?
Right. I just want to sort of add to something that my colleague said, Ramki, is that from getting to an industry parity EBITDA, one is about the product portfolio and constant focus on cost. Other is in terms of backward integration. Currently, for every 100 liters of ENA that we consume, about 30 we make and 70 we buy. Over the next few years, the idea is to get into 100% captive ENA, and that is a significant impact in terms of cost reduction, thereby sort of not just gross margin, but all the way to EBITDA. So product portfolio, continuous focus on cost, and getting to captive ENA. That really is sort of a 3-point program, and we're geared to sort of deliver on that. So that's really where we are in terms of how this transition would happen in terms of the peer parity EBITDA.
Sure. What about the volume growth front?
So the volume growth front, the way we are looking at the market, we are breaking it up into 3 segments.
Okay.
Mass premium, where we've been traditionally very strong. Idea is to grow our volumes in more profitable market. So it's profitable growth and not just growth, where we see about a single-digit growth.
Okay.
In the P&A segment, where the premiumization, early stage of premiumization is happening, we are looking at a double-digit growth. But in the premium and luxury segment, largely because we have not had a presence, we are hoping over the next 2-3 years we can not just participate, but participate with a, with what we call as right to win. So not just right to play and right to win. So we picked up 4 or 5 price flavor points where we believe that we have a right to win, and that's really what the focus is.
Talking about right to win, it does seem like that a large part of your contribution is coming from 3-4 states. I understand that your distribution network is large, but seems like West Bengal, Telangana, UP, these form the bulk of your revenue right now. Is that a conscious choice because of the brand recall, etc., or the target is to expand a lot more?
Yeah, so because we are a state subject, in many states, you bill with excise, and in some state you bill without excise. So the number that you're referring is a gross sales value, which actually includes excise duty. But if you were to look at it from a net sales value perspective, then it is Telangana, it is the state of West Bengal, it is the state of Maharashtra, markets like UP and Rajasthan, which are amongst our large markets, right? And the idea would be to sort of continuously focus on the top 10 market that may account for about 75% of the value and volume.
So if I just break it down a little bit in layman terms, not in the industry terms,
Sure.
Are you talking about a blended growth, volume growth of early double digit on
Yes.
aspiration terms?
That is correct.
In the next 2-3 years.
That is correct.
Because
Actually,
your
that's
high
correct.
double digit will come from mass volume, low double digit will come from your mass volume, and high double digit growth which you're talking about is the new areas you want to go. So blended will fall between 10 and 15 or something.
You're right. So directionally what you're saying is absolutely right. But internally, the thought is that value growth should be higher than volume growth. So the volume growth could be directionally early double digit, but the value growth should be more than that.
Just since you were talking about ENA, and I'm sorry if I'm putting you guys on a spot, I think there were some changes made in the GST meeting just a couple of days ago with respect to the ENA. Could you briefly talk to us about how it will impact the industry? Because we're still trying and decoding how exactly those GST implications are going to play out.
Yeah, I think very, very simplistically speaking, our subject is a state subject and it is under VAT, right? So the discussion has been whether ENA should be bought under GST or not, and now there's a clarity that will continue to be VAT. Only one state had moved to applying GST on ENA sales, and this order gives us a clarity in that particular state that VAT billing will continue, and to that extent, because offset is not available, buying GST and selling VAT, offset is not available. To that extent, we expect a little bit of margin improvement in that state.
Excellent. Thank you, gentlemen, Ramki and Alok, for dropping by, and we will be, interacting more often with you from here on.
Thank you so much for your time. Much appreciated.
Thank you.
Okay, so that.
If you like this video, then like, share and subscribe to ET Now.